If you're watching this video right now, there are two questions on your mind. Firstly, how do you make money on altcoins like PEPE that are exploding right now in the market? And secondly, why am I wearing a tank top? I'll answer the more important question first. Well, that's because it is hot and I live in the desert. Now that that's out the way, let's get into the video. Now at this point, everyone, I've been in the crypto space for 7 years, and the stated stories are when people make life-changing money on meme coins like PEPE. This is the chart over here, and if we swap over the coin market cap, you can see that this token has absolutely exploded in value. It's pretty much gone up parabolically and barely actually had any drawbacks. But the drawbacks it has had have been money-making opportunities, and I'll explain to you exactly how. See, being in the space for 7 years, this isn't my first rodeo. I'm an old man now, so I mostly trade Bitcoin and Ethereum. No liquidity issues, it's a lot easier, but when volume gets this crazy like it has with PEPE, there's serious money to be made. Now, this is not an asset I've been trading aggressively by any means. However, one of my trading systems is designed for exactly this, trading altcoins when they have crazy breakouts like this, and it's based on the principle that these assets never come down in a straight line. So let's take a look at the chart and let me show you exactly how you trade coins like this and make good money off of them. So we're zooming into the 1 hour because we don't have that much data on this asset. And the first thing we're going to do is take a look at the price action over here. Let me change this and draw it like this. Okay, so if you want to learn more in depth every strategy I share in this video, there's a free course I'm going to share with the link in the description below. Okay, so there's 2 ways I like to trade altcoins. Firstly, when the narrative lines up, when they're really hyped, I like to look for big all-time high breakouts. You draw a level, ignoring wicks like this that have deviated, and you wait for the coin to break out above it. Wait for this to play out a bit, and normally it's hard to predict just off a candle close like this. So what I like to do is add a moving average, and what this does is give me confirmation. So if you want to see this in action, take a look. Here we got a candle close above, but that is not strong enough confirmation for me, because often what happens is we get a close above the breakout level and then the candle comes straight back down and we miss our opportunity. So what I do, again, providing it's the right environment, and if you don't know how to do environment, that's a really important part of the system. You can't just do it at any old time. You wait a little bit. Wait for the second candle to form. Still not enough confirmation. Still not enough confirmation. Boom. That's our entry. That's our trigger. And we can enter at this level, then we can set a stop loss aggressively there or less aggressively over there, depending on how high we want to target this. And then from here on out, the breakout begins. Now, if you want to set profit targets, you can use Fibonacci extensions. You can use a ratio of where your invalidation is, whatever you like. But here's the second part of the strategy, because catching it early is a bit more difficult. This is the easier part that actually makes me more money, because when you're trying to catch it, most of the time, you're just going to be stuck with it going sideways. You're going to get stuck in a fake out and it's not going to go to plan. So you have to do it with small size because the win rate is going to be lower. But this is where the win rate can be much, much higher. So this is the point, the first breakout move here. What you do is, let's actually take it from here. You follow this move up. And if we go a little further back here, this is what I like to call the trailing Fibonacci strategy. So you keep following the price up, and this is so volatile, we'll have to even go to the 15-minute here. And you don't enter until we start making new highs like over here. Then once we make these new highs, you're making a bet on the fact that price is never going to come straight down in a line like this. Sometimes it happens, but most of the time when price comes back down, sharp wick, up, sideways, fake, down, up, sideways, down. That's what it looks like. And where we're trying to make money are these areas where the price bounces up. And this is really effective because people are normally scared to do this. It takes a lot of emotional discipline because you're not trying to make loads of money. You're trying to catch bounces. So let's follow this. We've got the breakout, and we're going to try catch on our first entry to the 0.236, 382, and 0.5. Our exit will be between the 618 and the 786 because that's our danger zone. So forward, follow, follow. Price broke down, went up, didn't quite hit our 236, so we keep waiting to get that first entry. Didn't hit it, so we do the same thing. Follow along. Price went up twice. At neither point did it hit it. Set this again. Entry 1, entry 2. Next candle, neither hit. We're still waiting for it. Let's let this play out a bit. Boom, there we go. This is our first entry into this position. And if you take a look at the volatility, you've got about 7% profit margin over there. So wherever you put your stop loss, however you play this, there is a 7% bounce on which you could have made money. Then the price even continued. So if you targeted an extension like 0.382, assuming the strong trend is going to continue as it's making these all-time high breakouts, that's 25% move you could have played with there. Now let's go back because it doesn't stop there. After your bounce is determined, you continue doing the exact same strategy. So watch this. Remove everything, start clean. Every candle close, you draw your Fibonacci's, you wait for your entry, 0.236, 0.382. Now I'm simplifying this strategy right now. I'm giving you the high level concepts. Don't just copy this, draw a Fibonacci, buy with your entire portfolio because you will lose money. That absolutely will not work. However, what you can do is take these principles, put together a setup yourself. I got a tutorial on my Telegram where I explained all the different components to a trading setup and how to construct one. Check that out. Make sure you have every single thing checked off, but this strategy is your starting point. This is that difficult bit where you're like, I got no idea what to do. I'm giving you an idea of what to do. Now you need to go do the legwork, do the hard work. So again, look, 2 entries, we drew it, we got our entry there, it bounced. How much profit do we have here? That is another 10%. Let's continue. This time, price comes down. So what happens? It doesn't win 100% of the time. Of course it doesn't. This is an L, but you have stop losses in place and you exit your position. So you win some of the time, you lose some of the time. That's how it works. So what we do now is, this isn't like Bitcoin and Ethereum. I'm not trading both directions. I don't want to short this on the way down. I'm actually just betting on the momentum continuing. In a bull market, this works a lot better than in this market. So I won't touch this until we get back above this level here. You also can get burnt really hard because these things pump like crazy and the slippage can be insane if you're shorting. So we're waiting. Again, this time we're looking for that breakout. Remember, the moving average, that's our confirmation. Let's see, do we get it? Almost, not quite. Boom, we got our confirmation. This is our sign to entry. Then we can put our stop loss either where the moving average is or a little bit below here. However aggressive you want to be, go test it, see what works better for you. And boom, you got your entry. You caught another pump. It's not that difficult. 2 strategies. One of them catches the breakouts to the all-time high. The other one catches the retracement opportunities. If I draw my Fibonacci's here, look, move started over here. We go to the top. We've got our entry at the 236. Now you can either scale another entry in at the 382, or you could stop this one out and start a new position. Again, that's the stuff you have to go figure out for yourself, build your own system. So then next candle, price bounces up. Look, often what I do is play between these levels. So I would have probably lost the trade on the 236, and then 382 over here went straight up and gave a 6% profit there. Now, what am I looking for next? The next thing I'm going to be looking for here is not an entry to the 0.5. Because what am I thinking? We've just recently broke out from the all-time highs. I got my little bounce and then it came back down. The bears are looking pretty strong, huge wick. So I'm reading the candles. I'm thinking, okay, the next best entry to me actually looks like 0.618. Now, why? Because we've got confluence over here. This point here tells me that, okay, there's some price action happening here. The 0.5 might not be as reliable. And also, when we get a bounce from a 382, normally what I found in my data, you're more likely to then get a bounce at the 618 than the 0.5. Similarly, if you get one at the 236, you're more likely to get one at the 0.5 and 382. It's a little bit more probable with the top 2 and a little bit more variable with the bottom 2. That's 0.5 and 0.618. Because think about this logically. The lower the price comes down after a move, the longer it's taking for buyers to step in, the weaker that move likely is. So continue. Boom, we got a big candle down. You may have got an entry, you may not have. Normally I scale them, so I would have been less than 50% into this position here, unfortunately. But price comes back down and we get our second entry. Then here we get a huge bounce up. So you catch a nice entry over here. You don't get shaken out. You got 21% profit to make. And it just continues like this the entire move. You can continue applying these strategies. You'll lose some, you'll win some. Again, look, we're waiting for the breakout. Here's the breakout. You get the confirmation with this sign. You continue going up. Look, that's a dip you would have made money on. That's a dip you would have made some money on and then got stopped out. And again, zoom out, take a look. Here, we're not trading it. We're not trading it. We're just waiting for the next breakout of all-time highs. You could do it here or you could do it here. It depends on your system, how you want to view it. This could be aggressively played depending on the environment, the narrative around it. And look, see this level here, this is the breakout. You got it. And again, dip, money, dip, money. This is how you play these big trending breakouts and make continual money. 2 strategies, both of them work. Master one first and then the other one. I focus doing the one that you come in after it pumps because it's easier. You're going to get more experience. You're going to get to deal with different emotions and see a lot more trades than if you're just trying to catch them before they pump. If you want to find coins, it's actually really simple. Hop on CoinMarketCap, arrange them by 24-hour percentage move, and just see what's been pumping. Right now, for this strategy, there isn't much. The only coin actually looking good is PEPE USD. And let's take a look at this live. What would I be looking for next on this coin? I would start drawing a Fibonacci here from when the price goes up because the strategy would have already played out. Look, we came down 618. Well, first we got a beautiful bounce at the 382 over here. Price went up, profit. Then second one we would have invented, didn't bounce. And remember what I said, if it bounces at the 382, it's going to be less likely to bounce at the 0.5. So it would have bounced here, we would have ignored the 0.5, and we would have played the 0.618, and we would be sitting in nice, comfy profit right now. When I started my trading journey, this was one of my most effective strategies. This is what I used to make tons of money on Matic and Link in the previous bear market. The reason I don't do it as much now is because my portfolio is much, much bigger. It's harder for me to get in and out of positions. But if you're trading with 5-figure positions, even 6-figure positions, when the volume is this crazy, you can absolutely kill it using these strategies. Good luck, and I hope this video helps.